Hello and welcome to Wisdom Bites. Hope you're well. Thank you once again for joining us. Very much appreciated. And in today's packed program, I'm going to be looking at, as per the title of the video, which says quite clearly that Bitcoin is about to do something it's only done twice in its entire 13-year history. So it's something that we need to really pay attention to. I'll also have a look at the other factors in the longer term picture, as well as the decision to delay the ETFs until middle of October. And many people ask me why I sold 50% of my long-term portfolio. So I'll give you the backdrop to the reasons why I decided to make that decision. So if that sounds interesting, then without further ado, get yourself a cup of tea, sit yourself down, eyes on the screen, and let's get cracking. And as per usual, the polite reminder, please remember everything in my videos is just for educational purposes. So please always do your wider research before you make any investment decisions or any swing trade decisions. So what am I talking about? What is this indicator that's only happened twice? If you've been watching my videos for the last 2 years, you'll know that I tend to use these particular 3 exponential moving averages. The blue line, which is the 8 exponential moving average, the yellow line, which is the 21, and the white line, which is the 34. These are based on the Fibonacci numbers, 8, 21, and 34. And if we cast our eyes back to when Bitcoin started around about 2010 here, one of the things we find very strongly that the price action has a very high respect for the 8 EMA. So before we got to the top here, in the first peak, as part of the first phase of the bull market, in the first 4-year cycle, which ended here in 2013, one of the things which becomes very clear is that the price action has a very high respect for this 8 EMA, especially in a very strong uptrend. So before we peaked out here, back in June 2011, you can see quite clearly that the price action had a very strong respect to the 8 EMA, after which it fell through the 21 and the 34 into a mini bear market over here. But after the bear market and recapturing the 8 EMA, we would have expected the price to continue on the 8 EMA. So this was the first time here that the price action fell below the 8 EMA after it had bottomed out. So we can see that having gone above the 8 EMA over here, the price went above it and then actually fell below the 8 EMA all the way to these levels here before we finally got above it one more time, and that was the start of the next bull part of the cycle, of that 4-year cycle here, which ended here in December, November 2013. What is of note is that once we'd got above the 8 EMA, the price once again respected the 8 EMA all the way right up to the end of that cycle here. Of course, we had minor excursions, but the blue line never fell below the yellow line until the market had topped and we went back into a bear market down here. So this was one of the signals that the bear market had started, where the 8 went back down below the 21 EMA. But once we had bottomed out here in the double bottom in 2015, if we move to the right here, so once we had bottomed out with this double bottom pattern and managed to get above the 8 EMA, you can see that the 8, the 21 and the 34 all lined up for the start of the bull market over here. And once again, we topped out in 2017 without the blue line, the 8 EMA, falling below the 21 or the 34. So far, up to 2018 here, the 8 EMA only went through the 21 EMA only on one occasion. And then in the last cycle that we had from 2018 to 22, once again, once the blue line had actually gone below the white line here, that was the end of this bull market as confirmation, one of the signs anyway. And then once we'd bottomed out, the blue line went above the yellow line and the white lines here, and that would have been the start of the next bull market. But obviously we know what happened over here, and we have to discount this. But after the bear market bottom, this was actually the second time over here. And technically this was another one here. So that was the third time actually. So in this situation, I counted this as 1, but you can call this 2 really. But it was part of the same situation that occurred here, which was the COVID situation. But this was the last times that this 8 EMA actually crossed back below the 21 exponential moving average. Interestingly, at the point of the cross of the blue line down below the yellow line, this red big candle was the actual point where it crossed over, really was the bottom of that trend. Similarly here, in the COVID situation, when the blue fell below the yellow line here, this again, this red line, was really the bottom of that trend. But once again, once we'd got out of this situation here, and the price action went above the blue line went above the yellow and the white lines, and once again, it actually showed a lot of support and respect to the blue line all the way to the top here. And we know what happened. It had a double top. So we obviously went to the top of the market one more time over here. And the current situation is that once the blue line went below the yellow line, that once again marked the start of the bear market down here. And we've bottomed out at 15,400. And once again, the blue line started to rise and went above the yellow and the white lines over here with this big green Marubozu candle. So the question really was, is this the start of the long bull market until the end of 2025? And one of the signs would have been if the blue line would have been respected by the price. And as long as the blue line didn't cross back down the yellow line, we would have been perfectly fine, just like the previous cycles. So if we have a look at what's exactly happening now, we can see that the blue line is just about to cross below the white line. It hasn't done that yet. We are on the weekly chart, so this week is going to prove extremely crucial here. And the thing we've got here, as you can see quite clearly, is that gravestone doji candle. And we had one at the top over here as well. This one had a much more greater probability for the price to go down because this was at the top of the trend over here. This one still is quite powerful, but it's at the bottom of a trend. So it doesn't have the same probability or the same power to push this much more lower. But at the end of the day, this is a rejection of higher prices, that the bulls tried to push the price high up to this level, but it's got rejected very strongly by the bears here. So the pressure is to the downside here. But the main thing to look out for is that the blue line, so if this price breaks from the current 26,000 range, then the chances are that this blue line is going to actually continue the trajectory and go below the yellow line one more time. And the question then is, will that mark the end of the downtrend down here? So that's the million-dollar question. So this is what we really got to pay attention to in the coming week, this blue line and the price action over here at the 25,000, 26,000 range. Okay, just a quick comment about the ETF, which has been delayed until the mid-October. So on Friday, we got this news here that the SEC has actually delayed the spot Bitcoin ETF decisions for all applicants. And it goes on to say that the US Securities and Exchange Commission delayed until October a decision on all spot Bitcoin exchange traded fund applications submitted by firms including BlackRock, WisdomTree, Invesco Galaxy, Wise Origin, VanEck, Bitwise and Valkyrie Digital Assets. I'm still very hopeful that the go-ahead will be given for all the ETFs, whether it's going to be in October or the end of the year or at the beginning of the year, but certainly the decision, for me anyway, has a very high probability to be in the positive. And as you can see here, Bitcoin and the major tokens gave back all the weekly gains. So on the Tuesday, we had the grayscale decision that increased the price of Bitcoin. But since then, we've given back all those gains from the Tuesday by Friday. And for me, these types of decisions actually have very little bearing for me anyway, in terms of the structure of the charts for the next 4-year cycle to end at the end of 2025. There will be stories like this all along the way. There will be disappointments and there will be some positive news as well. But that background noise really wouldn't affect the 4-year cycle and how I trade or how I invest between now and the end of 2025. Before I give you the reasons why I actually sold 50% of my portfolio here, as part of my explanation for selling 50% of my long-term portfolio over here, I want to give you some background information which is absolutely key, and it's something that you will need to actually be aware of, especially when we get towards the top of these cycles over here. And this information I'm going to give you, you will need to use in order not to do the thing that 80 to 90% of investors do when we get to the tops of these cycles over here. And I've been guilty of that in the past, so I know exactly how people behave and how they can end up giving up all the gains that they've made all along here, like in this cycle here, as well as in this cycle. So you may need to take some notes on this one. I'm going to tell you this very slowly because it's a principle that is applicable to every single money market out there, whether it be commodities like gold and silver, whether it be cryptos like we are here in this space, or whether it's to the normal stocks and shares in the Dow Jones and the Nasdaq. The same principle applies to every single market, and that is whenever we bottom out, or we see that a market has bottomed out over here, or over here, or over here, it's not our job to be stubborn in holding certain types of beliefs or opinions or analysis that goes against what the market is doing. So what happens is when we get out of these low points here and here, we start believing that the market is going to do this. And on the whole, for the next 4 years, that's what it's going to do. But along the way, the market starts to do something that goes against the overall bigger trend, like over here, and currently what appears to be what it could be doing over here. So this is what I want to alert you to, that these are some things that you need to be really aware of. And the reason for that is that this is where the pain of a portfolio really comes from, where investors lose the majority of their money over time, where what they do is they hold on to a belief so strongly that they cannot accept that the market is doing something completely different. So just imagine if you hold your portfolio all the way up here, and at this point, so just ignore this bit here now for the time being, where you get to this point and everybody's very much in a euphoric state and everybody's borrowing money, they're selling their cars, they're selling their houses, they're borrowing money from their friends, they're maxing out on their credit cards because what they've seen here is money doubling for them and tripling for them, and it seems like easy money and everybody becomes a total genius in investing. So they pile in at this point thinking that this trend will continue over here. But what happens then is that the market does something completely different. And this big fall here would be a telltale sign that the market is now doing something completely different to what it's been doing over here. And these signs always come at top of markets continuously. And what people can't do is accept that the market has now turned. It's no longer in this state, but it's now in this state instead. So you'll find at the tops of markets, usually people get caught out by the euphorias leading up to it, but then not changing very much when the market is telling you something different. The problem then becomes that you don't act quickly enough. So let's say when you see this, you don't act at that point because you're still in this state of the market going up. So you don't act quickly enough here because you're in this state, and you don't act quickly enough here because you still think that we're in this state. And certainly I was guilty here because my narrative in this bull market was based on the price reaching around about 300,000. And when the price was at 69, my thinking was that this is only going to be a lull until we go back to doing this, just like we did over here. That it was just another counterbalance bearish trend down here. And like I said, the problem becomes that you don't act quickly enough over here, and it becomes a situation where it becomes then too late, where you feel that you've now lost the ability to be early enough to make a change. And this is exactly when people end up riding the positions down to a significant loss. Just same down here, the same down here. So it happens repeatedly, not just in the Bitcoin market, but in every single market out there. It's just the psychology of the market. And sometimes it actually involves riding it all the way down to very painful levels, all the way down here, where you get out completely at the wrong time. And this is what Unfortunately, the psychology of the market does. So you're probably asking, okay, that's the problem. What is the solution to that? Probably 100 answers to that, and no one strategy is 100% correct. I have my own strategy, which is the one I'm going to share with you. It doesn't mean it's the only one or it's the correct one or you can't use a combination of them. So I'll share with you exactly why I sold 50% over here. So I'll share with you, with that backdrop, that principle I've just shown you about what happens in the psychology of the market, based on that interpretation is what's led me to offload half my positions in here. My understanding is that we should always be prepared to scale out of any investment decisions when we lose certain levels of support, or we see something in the chart that you know shouldn't be happening but is happening and is trying to give us a signal that it wants to do something that you really don't want it to do. Like for instance, in the last couple of weeks I've been showing you that if we came back and retested the 25.2, once is okay and very healthy, but testing it twice and 3 times, maybe the market is telling us where the direction of travel might be in the future. It doesn't mean it has to be, but it does actually increase the probability of it happening. Everybody out there has their own unique financial situation. And if we have a closer look at exactly the structure of the market here, and the reason why my situation is very unique to everybody else, and why everybody else's situation is unique to everybody else as well, it all depends on how and when you got into this trend over here. So if you've been watching my videos, you know that 75% of my investment in the Bitcoin miners came at this point when the Bitcoin price reached 17.5 and I started to scale into the Bitcoin miners. Because at this point, as per all my videos around that time, around the middle of 2022, I was expecting a turnaround back to the upper side. However, the FTX scandal broke down here and took it down. But if you were watching my videos, you'll know that I put 75% here and kept the 25% just for unexpected events like the FTX, in case the price went lower, which it did. So I scaled my rest of the 25% at this level into the Bitcoin miners. So if you have a look at the fear and greed index, at the point when the Bitcoin price had gone down to 17.5, I looked at the fear and greed index and you can see it was well below 10 here, around these levels. And historically, you can see those were the bottoming out areas. So that prompted me to actually go 75% in. And when the FTX scandal broke in November 2022 over here, as you can see, the market had gone up to these levels and then came back down, created a second bottom, a higher double bottom here. But you can see that the fear and greed index was around about the 10 to 20 around these levels. So what's that telling us is that the majority of people were extremely bearish and expecting the prices to go much, much lower. So when we have the price moving into the 60-day cycle low, that's when everybody's expecting the price to go lower, but that is where we bottom out on the 60-day cycle, and that's when we get in for the swing trades, or that's how the theory goes anyway. Okay, so these are the prices now updated for the 4th of September in the Bitcoin miners portfolio. So these are the types of companies that I bought at the beginning of the year, and I mentioned at the time, for the last 8 months, if you've been watching my videos, you'll know that my biggest 2 holdings are Cypher and Marathon. So you'll see that Cypher has had the largest increase so far over the last 9 months with a 363% growth. And Marathon has gone up by 184%. And these are at current prices of $12 and $3. And we all know that Marathon has gone up to as high as $19.88 and Cypher mining has gone up to $5.30. So despite the big fall that we've just had recently, this has still gone up over 300%. Whereas if you look at Bitcoin from the 15.4 thousand price, the current price here is only 67% up. So that is evidence that the Bitcoin miners are a leverage play, and that's what we normally do in the Bitcoin Miners Club that we have a video for every single Wednesday. That's where we cover the Bitcoin miners and the underrated long-term companies as well as the swing trades. So while Bitcoin has gone up by 67%, my portfolio has actually gone up by well over 350% in the Bitcoin miners. And those of you who are in the Bitcoin Miners Club will know that last week I presented to you a particular method of actually increasing the long-term portfolio without taking any risk hardly at all. And because of that method, I was able to add another 60% of my long-term portfolio here. So having got a hefty profit in this trend, the last thing I'm going to do is to actually ride it up here for a round trip down back to these levels down here. So based on all that background I've just given you, the reason for my 50% taking off the table here is simply because while I've got a profit up to here, it's a good idea for me, and it goes against my grain normally for a long-term portfolio, but there is for me a little danger because of what the price actions happened over here. There is a danger for me that we could end up in a round trip all the way back to either these levels here at 20,000 or down to 15, 16,000. So it just makes sense for me to take some of the profits after a big rise for me. So I do want to emphasize, this is not financial advice. I'm not expecting other people to do that. It's just I'm looking at my own situation and it just makes sense to me. Your situation may be completely different. So doing that over here, what I've done, may make no sense to you at all. So quite a few people have asked me, why have you taken 50% when all along here you've been saying that I don't want to get shaken out? And that's exactly true. But there are 2 points to that. Firstly, some new information comes available which makes you want to change your opinion. Or secondly, you reflect on what's been happening over here and then you reinterpret that in a different way. And we must always give ourselves the right to change our view, to change our opinion, to change direction. It's not a good idea to be stubborn in money markets. When something new becomes available in terms of information, or you can interpret something in a different way, in order to help yourself, then you may have to make a different decision. And this is the reason why I've done that. Now, one of the other things I wanted to mention is that whether it was in the Wednesday video or one of the Monday videos, I might have mentioned that if we lose this candle here, which is at 24,750, that the other 50% I would actually also take off the table here. So that was my thinking, but as I'm reflecting on it more and more, when I zoom out and look at the overall picture, I'm actually quite happy with the 50%. And if we do lose this level here, my belief is, and it may not be true of course, at the end of the day nobody knows what's going to happen in the future, but my belief is that if we do come back to this level here, this was the bottom of one of the previous cycles, like this one here, this one, and this one. So being at the bottom of a cycle, I would expect a big massive bounce back up here. How quick that will be, we don't know. So maybe if I took 50% here, and there's a big bounce back up here, it doesn't really make sense to come back here to the same levels as I'm offloading the positions. So what I've decided is that I'm going to keep my 50% here, and if I have to ride it all the way down to these levels around 20,000, then so be it. But what I will do is to try and pick up the 50% that I've actually offloaded here, anywhere between this range. So I hope you get some sort of an understanding in terms of the psychology that I've been using, first of all to get in here, and then to ride all my positions up to this point. And it's only the trigger point over here when we came back and retested the 25.2 very strong neckline that we created with this head and shoulders pattern over here. It's only then that's triggered me to think in a slightly different way. I was quite happy to actually carry on waiting until I get to the end of 2025 before I actually sold my positions. And the only exception to me holding those positions all along here would have been this, which I've been mentioning for many, many months. And that is the first peak that we were expecting around about the $45,500 to $50,000 mark. Based on these two lines here, the RSI entries MTF, the multiple time frame, as well as the pi cycle. And that still applies. As soon as we get up to this point, this is where I will actually sell, maybe even all my positions, but at the moment I would consider 25, 50, 75%, any of that, depending on how we get there. That's the main thing. So very important to just explain exactly what my thinking is. Please remember, this is not financial advice. I'm only telling you what I'm doing and what I'm thinking, and that's based on my own financial position, and those financial positions are unique to everybody, so everybody has to adjust to themselves when making their own decisions. And that's why I always say to everybody at the beginning, please do your wider research so you can then use that wider research to make the best decision for you. And once you make that decision, you must take responsibility fully for that decision and own that decision. And by doing that, you'll learn a lot about investing and swing trades. Okay, so it's been a very long video, but I was hoping I would add value and give you some insight into my thinking. It doesn't mean I've got all the answers. I certainly don't. And I can assure you that I've made plenty of mistakes ever since I came on board to the crypto world around about 2017. So along here, I've made some horrendous mistakes, especially around these levels when I didn't really understand the crypto market. But I've spent a lot of time looking at the psychology, the structure of charts, understanding the various indicators, etc., which has given me a lot of confidence to make some of the decisions that I do now. If you are interested in the Bitcoin miners, we are really at the beginning of that bull market currently. I would say that the Bitcoin miners are presenting a wonderful opportunity, especially after the big pullback that we've had. So just to give you some idea of what we've done in the Bitcoin Miners Club so far, is that we've had 3 swing trades. Then this is the record that we have so far, and that is in the first set of the swing trades we achieved quite good increases, as you can see over here. These were our first trades in March. Then in July 2023 we had the second round of the swing trades where we had this kind of results with those trades. And the special features that we've had a bit of a mixed bag. We've varied from increases like in TerraWolf of around about 285%, as well as some not so good ones like Mawson so far, which is around about 66% fall. So we had a bit of a mixed bag there. And the current set of swing trades, the third round, I've had to close all my swing trades down here because they were based on the bottoming out of the 60-day cycle here. And based on those in the past, we've ended up doing very good trades. But what we've now got is the possibility of another failed cycle here, and hence the closing of those third round of swing trades. But what they do present is a great opportunity to get in at the lower levels. So while we're showing a loss in the third round of the swing trades based on what's happened over here, those same Bitcoin miners are at levels which could present a very good opportunity. I'm not saying that everybody should jump on board those trades because I've only just closed them down here because of the movement of the price action here, and that's based on the expectation that the market may go down further, which would then present a better opportunity. But that's something that we're going to discuss in the next 1 or 2 videos. If you do want to join us on the Wednesday videos for the Bitcoin Miners Club, where we cover long-term plays as well as swing trades, as well as look at all the opportunities that will present to us over the next 2.5 years, then all you have to do is to go to any of my videos. If you go to the bottom of any of those videos, you'll see a join button. By clicking on that, you'll be able to join the Bitcoin Miners Club. And the journey we have with the Bitcoin Miners Club, just like Bitcoin, is that from where we are currently, we're expecting the end of this market to be at 2025, where we're expecting the prices to be much higher. And as we know, the Bitcoin miners are a leverage play by 3 times, 5 times, 10 times, and in some cases it'll be 15 and 20 times or more. And we set up the Bitcoin Miners Club to be able to take advantage of that leverage play. So if you want to join us, click the join button below any of my videos. Just a brief look at the 60-day cycle so we know exactly where we are and where we may be heading over the next few days and weeks. And that is that we've just had the third revisit in the market, and that sometimes is a way of the market telling us the likely direction of travel. So this is the third visit now we've had. We've had one visit down here, second one, and currently we've just had that other one here as well. So for me, the cycle that ended over here has now been invalidated by what's happened by coming back down here one more time by retesting these lows down here. Because as you can see from the previous cycle, once we bottom out, we tend to have follow through all the way to the top. Same over here. And this is something that we haven't had. What we are having is a potential to form a double bottom. So this could go like this, and we must be mindful of that. But because we've come down and tested this the third time, the probability, and it's all about probabilities, there's no certainties. I don't know what's going to happen tomorrow, but my probability is that it's going to go more further down rather than to the upside. But certainly we need to be aware of both sides. And when the market is changing, according to this retest at the 25.2 level, we just have to readjust our own narrative. And this level here at 24,750 becomes very critical because this is the M pattern. over here. When you break the middle of the M pattern, it usually, not always, usually triggers off a bigger move to the downside. And that will obviously mean another failed cycle here, just like this one. So we've had 2 failed cycles since the beginning of the bull market down here. And we always have to respond to the facts of the chart, not to the narrative that we want it to be. That we may want the market to keep going up in the same direction as before, but when we see signs that it doesn't want to do that, then we have to respond accordingly and go with the facts in the chart. And as investors and traders, we want the market to go in one direction, and that is this direction, of course. And our bias will also be in that direction. And since we hit the 15.4 thousand, that's where it's been. But just like down here, when everybody's bias was to the downside, the market was telling us a completely different picture, which we picked up back in November and December last year. Because the charts were telling us a different story, and we changed our bias from here to the upside. And we just have to be prepared sometimes to let go of the bias. Yes, the long-term trend is absolutely still firmly in that direction, but just in the short term, I think we just need to be aware of this information that's been playing out. We have significant points of the end of the 60-day cycles previously as a guide here. So I would expect a big bounce here at around about the 24/7 level. But if it does go through for whatever reason, then this level here would provide an absolute critical level. And this is where I would, with a very, very high degree of probability, expect a bounce around the 20,000 mark. But there is also a level which I think most people are not aware of, and it's this level here, at the tops of these candles here, and at the bottoms of those candles there, at around about 21.5. So just keep an eye out on those levels. So 24/7, 21.6, and this one here at 19.5 to 20,000. So as a counterbalance to this narrative that I've been painting so far, that we may fall down here because of this retest multiple times of the 25.2. So this range of between 31 and 25, it may well be we go and retest that and get rejected and come back again. So this could happen all the way up to the end of this year, even up to the halving. So we do need to be aware of this. And what the market is doing here is it's trying to suck people up at the top levels and shake people out at the bottom levels. And this is something I'm going to keep an eye on, because having now lightened my positions down here by about 50%, if I do see this pattern developing over here, then I would be very much prepared to go back in with those 50% anywhere around here to reposition my portfolio one more time. Because the chances are, if it tries to do that, then the probability then moves to the upside to break the 31 to go to much higher levels. So you need to really be on board anywhere around here if this is what the pattern is over the next few months. Okay, I think we've had a very long video. I've tried to bring as much value from my insights into the charts as much as I possibly can. So if you found value in the video, then please do remember to like and subscribe if you haven't already done so. And if you've got any comments, questions or suggestions, leave them in the comments below. Until the next time, take care, stay safe, and I'll see you in the next video. Bye for now.